Well, hello. Um, Hi, everybody, and welcome everyone, wherever you are in the world, to the inaugural Trader Cafe series on YouTube. And welcome, Ash, as
Good
well too.
morning, mate. How are you? Yeah,
I'm
good to
very
be
good,
here.
thank you. Very good. Hey, folks. So, look, this is a show where we're going to interview people from the world of trading to sort of help learn what motivates them and what drives them to succeed, I guess. And during this series, we're going to be talking to some traders, and Ash has kindly offered to sit in with me for the first session. We're going to be talking to some market observers and also some market analysts as well too, which is really about bringing insights to you guys about how to go about improving your trading edge. So look, firstly, I just want to just a quick note about a prize on offer today. I've persuaded Paul, lots of arm twisting, to give away 2 weeks of access to my broadcast group to a lucky listener who's going to be drawn at the end of the show. So stay with us and enjoy the conversation. Now, our first guest is Ash Paul. Now, Ash is based in the UK, so we have almost diametrically opposed time zones here. So whilst it's nighttime here, Ash has just got up in the morning and
Yeah, it's been a mad rush, to be honest.
and you are looking a lot better than I do at that time in the morning. So look, Ash has been a private trader for over 10 years. He's a really good friend of mine, and I think we've appeared on stage together quite a few times in the past. So Ash's speciality, I guess, or your starting point was in equity trading, and we're really going to talk to Ash about his trading edge, and really, I guess these days how it transfers across different asset markets as well too, because after all, trading is trading pretty much wherever you go. But people always like where they started from, as I did. So Ash, welcome, mate. How are things? And maybe you could just give us a very brief synopsis, I guess, of the Ash trading journey.
Oh yeah, sure. Things are good. I have to say, we're kind of things are changing over here, as everybody's probably reading in the news that the vaccine rollout is going pretty well. So the clouds are being lifted. I am fortunate because I live in Brighton, which means that I've got the beach, and it's a massive, massive difference. It was like a summer's day here yesterday, for the UK standard. It was really pleasant temperature, but the sun was shining through without any blue skies, and I was kind of sat there looking at the sea. So there's not really too much in the way of world problems that get in your way when you've got that kind of environment. So life is good, mate. I have to say it's been not too bad, not anywhere near as bad for that it has been for many other people. My journey started, I'd say, 15 plus years ago, and I was in a band. I was a professional musician, but I was always interested in investing, a kind of slash gambling, I suppose. Well, it was gambling back then because I didn't know what I was doing, but I was just interested in trying to pick things that could be winners. Whether it was maybe a horse or a football team. And eventually, I kind of discovered more about companies. Could a company be a winner? And I went to a friend's house, and they showed me a trading platform, and I saw them make £1,000 within no time whatsoever. And it just sparked my interest. I thought this thing is absolutely brilliant. Now, of course, we both know that isn't sustainable. He didn't have any knowledge either, and he just got lucky on that particular trade. And within a couple of weeks, he wasn't even trading at all anymore. And I didn't know at the time that there was so much more than to get on this pathway than just clicking a button and effectively picking, guessing the right way, and you can be right and make £1,000 in a moment or whatever. So I was kind of hooked, but it was only when I started losing money that I was just interested. I was like, what's the mechanics of this thing? How does this thing work? There must be a way to make money out of, doing, interacting with stocks and commodities and whatever else it was. In fact, at that time, it was an index. It was the FTSE 100. That's where I started. And I started reading books. The first ever book I read was a book by a guy called Malcolm Pryor. and he was just literally picking out stocks that were on longer term time frames using the ADX indicator as a indication for trend, and just wrote a small little handbook. And I tried it, but it wasn't fast enough for me. It was kind of all on a weekly time frame, and he was doing it on a daily basis. I my first experience obviously was making lots of money in 20 minutes, so I didn't really understand how this was ever going to really make me any decent money, looking at longer term time frames, and how wrong I was. Full circle, I'm kind of back almost where I started now. But I then went on after reading that book and went on a trading course, and this is where I met Chloe. And from that trading course, I wanted to know more information, and I started looking around the internet for people that were trading live, and I found this guy that was doing it in the States. And I heard him say that he wanted to open up the market to the UK, and I thought this could be my chance. So I sent him a little bio, a little video of myself, and just said, if you teach me, then I will teach the stuff that you're teaching, because he seemed to know what he was doing. And the more I got the job with him, and the more I kind of the more I started trading with him, and the more I started to get lessons from him, but trading all day long. I was literally trading from 8 in the morning until 9 o'clock at night in the UK session. But the more I did that, the more I realized how brilliant he was. And every now and again, he dropped me another new nugget. When he thought I was ready for the next thing, he dropped me another new nugget. And I did that for 3 years. And that really was when I just blossomed. That's when things really started to tip over to the next level, really understanding that there was something else behind this. And there was something else that I needed to learn if I was going to be successful. And then I met Paul. And actually, Paul took me on a different journey. It was almost a different aspect of my development. So the previous guy was really talking. It was my technical, analytical development really happened then. But when I met Paul, it was more about. It's become more holistic. I think at the time it was maybe more about psychology, but it's become more holistic because now I'm in this group with you and everybody else. My trading journey is changing all the time. I don't really know exactly what I'm going to develop at next, because whatever's there, something will spark, and I say, okay, well, I need to kind of gravitate towards that area. And this is where I find myself now, with feeling like I'm in a very, very solid position, and now almost able to do some of the really intricate stuff. I feel like almost like an accomplished musician who can now go and explore maybe some other styles, and that's how I feel as a trader now.
So this is about evolution, right? So when you get down to it, so if we've talked about this before, and I think one of your defining features, I would almost say it's your trading, one of your key trading, key part of your trading edge, right, is your ability to evolve. Right.
Yes.
You don't sort of say, okay, well, that's it. That's all I want to learn. Right. Trading for me is about picking things up over the course of time, and I just can't learn it all at once. I get that. So I'm just going to spend my time evolving it, because there's always more opportunities. Right.
Yeah. And that's really interesting, because part of that is a lack of knowledge in a certain area, and needing to kind of, expand that knowledge. But part of that is because the market's changing, and cryptocurrencies weren't around when I started trading. So I've had to learn about that. And as much as there might be people out there who are happy to completely ignore cryptocurrencies, they do it really at the risk of damaging what they are doing in their own portfolio, because I think you need to know a little bit about everything that is really driving the market, because it's all linked. There will be some kind of link between the likes of Bitcoin and whatever else you eventually come back to, because it's now a currency, so it means that it's linked to other fiat currencies. It's linked to the dollar, and as soon as it's linked to the dollar, then it's linked to everything else which is dollar related. So I think some of it is because, as I say, the market is changing, and it's a necessity to learn something. Now, I'm not saying you need to learn everything about these things, but you need to learn something. You need to be aware of them, aware of what's going on. So that takes a little bit of time to educate myself in. But then there's also, there are also other aspects that I'm just not adept enough at yet to really kind of go, okay, now I've stripped this right back, now I can put it back together again. And it's a brilliant job for that. It's a brilliant industry for that. And as I say, I would always kind of compare it to music, because music's exactly the same. It's not just blobs on a page and tones coming out of a piano or a guitar or what any other instrument you want to suggest. There's so much more you can always learn. It just becomes layers upon layers upon layers. And the market really is the same kind of thing, which is why you can't ever win 100%. And why the challenge isn't to try and win 100%. The challenge is to understand how to control the, let's call it 51% that you do win at. That's sort of like almost where, because you say about the edge being about educate, the desire to be educated, and that desire comes from the fact that to be able to go, I need to be the green 00 bit on the casino table. What's it called? On the roulette wheel. I need to be the 00. That kind of slight percentage. And how do you do that? Well, you do, in my opinion, anyway. You do that by making sure that you're on top of your game, and making sure that you're on top of the information that is available to you. Not picking useless information and thinking you can do it. And that's the other thing. You need a huge slice of humility in some respects. And again, that's working on your psychology. So it is, as I said before, it's a holistic industry in some respects. You can't leave anything behind.
So you talked about the needing to absorb things, right? Absorb information. How do you think that traders now, say, if you look back, to the start of your career 10, 15 years ago, whether there's more information coming at you every day or less information coming at you every day, and how would you think about filtering that?
Oh, mate, that's such a good question, because I think that is an issue that I've found over the course of the day. And I'd love to say that I discovered it by educating myself further, but a lot of the discoveries I've made have been by complete accident. And there is more information now. There's no two ways about it, which means that there's more. Because the thing is about this industry as well is that most of the information is absolute rubbish. So it means there's more rubbish information, but there is more quality information as well. There are more people that are not only willing to be able to share their information, but they are able to in a much cheaper way, because they don't need huge rooms and they haven't got the same expenses. So the internet has made it brilliant to go and mine for information. There are books that people have written, and is really finding out the people that write the good books, and then you can go and make sure that you research that.
Look, I am so much in agreement with you on that, and the reason why I think it's important. So I have people that I follow, and I followed 5 or 6 people for pretty much the last 15 or 20 years.
Wow.
And it's not to say that I listen to everything they say. And, to your point, social media gives a lot of people the ability to say a lot of things. But what I do is that I trust them.
Yes.
Okay, and I think this is one of the big things with the information flow, right? So, a lot of people make their living in this business by talking about what's just happened.
Yes.
And our challenge as traders is to say, well, that's already in the market. We're interested in what's coming next. So when you're looking at what's coming next, it's that what you said earlier about that key theme, right? So what's the theme that's driving everything? right? So often, you know, I find, you know, in my mind, what I'm doing is I'm always trying to sit there and say, right, where is this market in terms of the sentiment cycle? You know, are people excited about owning? Let's talk about a very current example, right? Excited about owning the UK as an asset class,
Mm-hmm.
right? You know, you could easily argue right now, post Brexit, post COVID, you know, however you want to call this, that the UK is probably under allocated by a lot of people, right? There's a lot of fund managers who have customers who'd be very unhappy if they had an exposure to the UK. So when you look at the sentiment cycle, there's an air of discouragement and despondency about ever owning the UK. And maybe the break we're seeing in some of these currency values where sterling's been rallying so much the last 3 months is the beginning of the sign that things are changing, but it's only the beginning, right? And so you get these medium-term trends, and especially in FX, right, that last for some time. But in order to do that, you've got to have that insight that not, you know, within the sentiment cycle, but I need to back it up with some macro. I need to back it up with some, you know, some real money flows, and to search out the people that have that information is actually quite hard. I feel a huge amount of sympathy for people when you're confronted by a Twitter feed that's got 350 people telling you what to do. So it's almost like the reason why you go to Wall Street Bets is because at least they tell you what to do and put a smiley face next to it.
Yeah. Yeah, do you know, that is a fascinating point. It's a good point, because the Reddit crowd have probably made more money over a course of 2 or 3 days than I would have done in a month or whatever long. But it's back to that distraction thing. I don't care, because when it comes when we were talking, when you were asking earlier about how do you filter out the good information, I just leave my office. I just leave the desk. Because if you sit here all day in front of your computer, you will find information. And most of the information is bogus, as I said, you know. So if you've got a certain filter already, you know, if you've got a certain place that you go through every day or every week to go and make sure you listen to a certain podcast or read a certain website or whatever it is. As soon as that's done and you have made your decisions on the week, or as soon as I've made my decisions on the week, I should say, then I'm sort of done with my job. I'm sort of done with the job. You know, apart from triggering the choice that I've made, apart from expressing what I've decided, I'm kind of done with the job. And the longer I sit here, the more likely that I am to lose focus or get off my game. And you know, and as I said before, that was completely accidental. I found that you know, because I had other commitments that would be going on during the day, I found that I was making more money, and I was like, hold on, I always thought that it would be the case that if I sat here for long enough, I'd find more opportunities. But you don't actually. You actually end up finding, yes, you find more opportunities, but because most of them are bogus, it ends up affecting your account negatively rather than positively.
Yeah, and look, I think that's a key point, right? So, folks, if you're listening out there, I think just to reiterate what Ash has said, you know, look, time away from the screen is important as time in front of it. Now, it's really hard when you're first starting out. You're going, oh my God, I'm confronted by 100 things I've got to know, and I think this is part of what you were talking about with the evolution again, right? I keep coming back to it. And I'm still learning these days. You know, I'm not happy that I'm not part of the cryptocurrency boom, and I wasn't involved in it 3 or 4 years ago. And whether I'm late to the party or not, in my mind is sort of frustrating for me, but I can't let it distract me from what's actually going on. There's plenty of opportunities out there.
Yeah.
And, you know, I see what's happening to other people, and I wish them the best of luck. It's really important that people are successful in this business. You know, it can be done. And, you know, Paul had an interview with somebody who's made the first $1 million, I think, on the in the business, and I believe he's gone on to be more successful since then. And look, I think this is fantastic. But it's also a sign of the times, right? And so, yes, you know, if I have a regret, it's that I wasn't in crypto a little bit earlier and understanding it a little bit earlier. But, you know, sometimes people point work gets in the way. And really what you're trying to do is stick to your knitting, right? And say, okay, I'm learning. This is what I do. This is how I do it. To veer me off that path is actually quite hard. I'm open to new ideas and I want to evolve. But what I'm going to do is I'm going to carry on doing what I do best. and not get too distracted by everything around me, but also have an eye and an ear open to when things are quiet, maybe go, oh, I wonder about that thing. I'll look into that now. Or, often what tends to happen to me is my best research time is normally when the account's in drawdown. And I'm starting to, you have that slight concern when things start to go against you, and you're going, oh, for God's sake, the market's not working for me right now. Like, what else can I do to distract myself? Oh, let's go and do some research.
Yeah.
Let's find out what happens when the S&P goes down 3 days in a row, and where it opens is really important, because that's really useful information, right?
Yeah.
So, look, thanks for that, mate. So, just current themes. Where are you at? With what you think is the key drivers in the market, because there's been a bit of action in stock markets, actually a little bit confusing action in stock markets for the last month or so.
Do you know, mate? And to not make it sound really simplistic, I'm putting it pretty much down to bond prices. But I think that 10-year is really, really crushing, really, for because if you look at what's happened with the stock market over the last few weeks, it's really been about the Nasdaq more than anything else. That has been the heaviest beaten up out of all of them. I still really like the Russell, and I would continue to. I'm looking for an opportunity to get into the Russell, but it's just maybe a shade high. I think it could come back a bit more. It might not, but I might miss that one. But the Nasdaq, I think it's got further to fall, and as I say, I put it down to the 10-year bond price, and the reason that I say that is that the margin of safety has just diminished quite significantly for those Nasdaq stocks. The US 10-year is now something like 135, 140. It's in that range. And I think if it bumps up anywhere close to 2, which is on its way there right now, because it's come from a fairly low base, then it just means that the value that people are looking for in those kind of growth stocks is just eroding, and because they have eroded more than anything else. I think that's why the Nasdaq has been most heavily affected. Now, how that kind of like gives us a little domino effect with the other stocks and shares is where it becomes, I think, quite interesting, because I don't think by any stretch, when we're getting this particular pullback that we've got right now, that we're in anything than a pullback. It's just a retracement, in my opinion, and it's a buy the dip kind of scenario. And as I said, I'm still really keen to buy the Russell. But where it's interesting is picking the correct things. There are certain things that I still think are going to do quite well during this period, and it's not like an all out and out route to sell everything that you have in your portfolio. Some things need to be picked up during this particular period.
Dude, if we're selling everything in the portfolio at 1.5% on interest rates, yeah, I think we've got a couple of problems.
Yeah, well, do you know, and that's the thing, isn't it? Because at this particular stage, that bond rate is still under inflation, but it's close though. It's not far. It's not far, and that's the and I suppose that's the because just to explain a little bit to people that are listening, the 10-year does become a part of the discount mechanism. So when you are buying the likes of Tesla, you are saying, well, in a few years' time, I'm hoping at the current kind of rate of growth, I'm hoping that I'm going to make my 5-6% in yield or whatever. But when you've got a bond rate which is popping up, then you have to diminish whatever the bond rate has popped up, that 1.5%, from that projection that you're trying to get. You're trying to get 5%. You have to diminish. Have to take away the 1.5. Now you're only going to get 3%, and you start going, well, is it worth it? Is the margin of safety now worth it with the likes of Tesla? So you sell Tesla. That's the simplistic kind of explanation of it. But there are other things that don't have the same issues, because Tesla don't pay a dividend. So you've literally, all you've got with Tesla is the price going up, and the hope that the only reason that you buy Tesla as a big corporation is the hope that one day they make enough money to actually start paying a dividend. Well, if the bond rate's going up,
hang on, make any money that isn't And make
Oh,
any money
mate.
that isn't emission credits or out of a Bitcoin long trade.
We shouldn't go down that path, should we? Because
Maybe we
honestly,
shouldn't, no.
but only because I've heard Elon Musk get an absolute hammering recently, and it's very difficult from my perspective because he's a he's a
He
genius, a
is.
brilliant
Yeah.
man. But there's the sort of like when you come down to the kind of financial aspect, you sort of go when people say, "Yeah, but he's never made a business profitable." You're like, "Yeah, okay." Anyway, let's not go down that rabbit hole. Tesla, I'm not interested in at all. I wouldn't, I wouldn't personally want to buy Tesla. Not because it's not a brilliant company or it doesn't make brilliant products. The company's questionable in some respects, but the financials, that is. But the valuation for me has always been a tricky one to kind of be involved in it, and it's just not my game. I don't like stuff that moves like that. To try and get on board, I would have preferred to be on board already, and then just left the party to kind of go in whatever direction it was going in. But now I find it very difficult to get on board that train.
Yeah, look, I don't blame you, actually. So I think the longer you're in trading, the harder it is to keep buying new highs.
Yes, it is. Yeah,
actually, because you've seen it so often where you buy a new high and it reverses in your face, and you sort of go, "Oh, okay, hang on." Given that you probably have more trend reversals than you do have breakouts, sort of by definition, because markets trend about 30% of the time, then it's really hard to see the market going up. I think a lot of traders fit in the camp of, well, I'll wait for the first retracement when I've got a confirmation that something's happening. It's really hard to say, actually. And by the way, it's probably the easiest and most simple trading system in the world, which, this is a breakout, I'll just buy it every single day and see what happens next.
Yeah.
Which is I think a complete 360 journey that you go through as a trader. Maybe the end game as a trader is to understand how to trade these vertical markets where we seem to be part of these days in a way which is exciting, right? And they're also so highly correlated. I know I'm conscious of time, but just a quick comment on last week. I had a quick look through in my trading group just now. I had a quick scoot through before the trading group. I looked at 60 different markets, and every single one of them reversed on Thursday and Friday. Every single one, in one form or another, had a bit of a change of, if you like, a shift of direction. Some up, some down. But I think that there's something going on in the world about this correlation of one, which is quite interesting, and it often tends to occur around this time of euphoria in asset markets and things like that, as we're maybe needing to enter consolidation phase, and maybe there's something more to it. Have you got any views about what happened Thursday, Friday?
But mate, honestly, I mean, when it comes down to it, I do take us back to that bond rate, and I'll tell you why I'm really focusing on it, and I don't want to bang on about it, but that answers a lot of questions for me. When I looked at gold, and I saw gold falling, and knowing that gold can be negatively correlated when the bond yield goes up, it kind of ticked the box. I was like, okay, well, this isn't an inflation trade. This isn't because of inflation sort of coming. It is, but it's now manifesting itself into this 10-year bond yield, and as a 10-year bond yield is coming down, there just seems to be an exit from equities, and there's also an exit from gold. Now, I do think that levels off, and I'm looking for the time that does level off, and the opportunity to see gold and silver go much higher. But as I say, maybe it's too simplistic. Maybe that's what it is. But I've been a few months out looking at this and saying, you got to watch this 10-year here, because this is starting to get a little bit hairy when it's sort of starting to edge up to kind of 115 and 120. 124.
Yeah, look, and if you look at just even since January, for the record, the long bond, so that's the 30-year Treasury bond, has lost over 20% in value. Right, that's pretty impressive. Ash, I'm really sorry, dude. We're pretty close. I want to try and get to rapid fire, but before we do that, we have to do a prize draw. Is the support crew around to do the Wheel of Fortune for us, so that we can find out who's won the prize draw? There is magic happening. Look at that.
What's the prize this week, Julian?
The prize this week is 2 weeks in the free 2 weeks from the broadcast group.
That group's been on fire, hasn't it?
Yep, we're doing really well. So Paul C.
Mate, we're going to give Paul C 15 seconds to tell us he's still in the room. You've got to be in the room to be a winner in these things. We'll give him 15 seconds to post that he is in the room. Otherwise, we will redraw and give someone else a chance to have 2 weeks in that broadcast group that is on fire. Paul, are you in the room, please? Yep, that'll be you. Paul,
congratulations, Paul. The support crew will be in with you just to give you some more details about how that works. On a Sunday afternoon. Ash, we've got like literally a minute left. I'm going to do rapid fire with you. Just bear with me because you know I love my rapid fire questions, and we've just got to go through a couple of quick ones. So this is one word answers, right? So what trader has most influenced your trading?
Genuinely, the guy that took me from being not professional to unprofessional. I probably shouldn't mention his name, but
that's okay. That's okay. That's fine. One guy, right, folks? Just remember that, right? What is one attribute a trader should have?
Oh, I was thinking about this the other day. One hour is not. There's not only one, so let's give you one. Patience, very important.
Brilliant. Joe Biden, savior or caretaker?
Ooh, that's a good one, mate. Savior, I'm going to say, because I think he's going to settle the markets down for us a bit.
Okay. Crystal ball time. Where is Bitcoin in 12 months' time?
I'm going to err on the side of caution and say 80,000.
Oh, caution. Wow.
I think it doubles. I think it's got every chance to double.
Okay. Last question. In a speed eating food contest, what food would you choose?
Spaghetti.
Brilliant. Ash, thank you very much. And look, folks, thank you very much for coming on the last few minutes of the last 30 minutes, I guess, of hopefully our first and of many to come Trading Cafe. So as always, I'd like to say, if you have been, thank you very much for listening. And I guess it's a flip over now to TTR, but thank you everybody for organizing this. You guys have been brilliant in the support crew. Thank you. And I'll see you in a couple of weeks' time. Thanks, folks.
Bye-bye, guys.